Newsfirst Newsline with Faraz Shaukat Ali.
And a very good evening to you and a warm welcome to Newsline Zoo. This evening, our guest is the former Deputy Governor of the Central Bank of Sri Lanka, Dr. W.A.Wijewardena, who has been a vociferous critique of various matters, economy especially. And so a very good evening to you, Dr. Wijewardena.
Very good evening, Faraz.
And thank you very much. So straight away, let's get to the point. What is your take on the imposition of retrospective taxation?
Well, Farah, these retrospective taxes are very bad taxes because you are imposing these taxes on the basis of the incomes earned by people in the past. And when they are asked to repay these taxes in the current period, they don't have a cash flow to meet the obligations on their part. And most probably because they may have already invested that money, those profits in certain investments, or they may have paid out dividends, or the money would have been already used up. So when they are to pay the taxes in the current period, Farah, they will have to either borrow money from a bank or they have to sell some of the assets, which actually puts them into an innumerable difficulty of meeting the government requirements. So taxes with retrospective effects are bad taxes in the opinion of the tax experts for us.
So are retrospective taxes offensive taxes?
They're actually offensive. Now you can remember in the Yahapana government, the minister Raikavnanaka also imposed a similar tax on the super profits earned by the private sector companies.
Yeah.
And that was a very bad tax, and the government was not able to implement it fully and collect the money that they had intended. Because it leads to a kind of policy distortion. And it actually punishes the people who have made money in the past, which is a bad thing.
And therefore, because it appears to target a certain section of those in Sri Lanka, these companies in this case, isn't that, when tested against the Constitution, wouldn't that appear to be at odds with the equality before the law for everybody as envisaged in the Constitution of Sri Lanka?
Well, in terms of the equity of this taxation and also the necessity by the government to raise this revenue, it is all, if the government wants to impose a surcharge, it's always recommended that surcharge should be an across-the-board surcharge covering all the people who are liable to pay taxes.
So you're talking about a slab system then?
Yeah, that's it. And if you actually, Faraz, if you select a certain category to impose this tax, as you say, it would affect the economic operations of those taxpayers. And finally, it is the economy which would suffer as a result of that. But of course, we have to remember from 1961 onwards, Sri Lanka had imposed this type of surcharges, but all these surcharges were across-the-board surcharges and not surcharges that had been directed towards a particular category of taxpayers.
So really, what is the alternative then? How does the government raise money in the national interest?
The reason for the government to impose this particular tax for us is that the government has lost tax revenue to the tune of about, say, 500 billion rupees per annum, which is about, say, 3 to 4% of the country's GDP. And that is because it had offered a very attractive, unsolicited tax package, concession package to income taxpayers and the value-added taxpayers in 2019. So our suggestion is that instead of going for this offensive retrospective taxes, the government should have restored the tax regime that had prevailed in Sri Lanka prior to 2019.
And moving on to the detail, this surcharge tax what would the extent of the impact or the effect be on the capital employed by the banking and the financial sector?
In the case of the banks, far as all banks, even very small banks had made a profit of 2 billion rupees during this tax year 2021. As a result, these banks are subject to this particular tax. We'll have to be mindful of the fact for us, the banking sector is the heavily taxed sector in Sri Lanka because they have to pay corporate income tax at the rate of 24%. In addition to that, they have to pay tax on financial services, value tax on financial services. And all these taxes, if you take the total taxes they have paid to government, as a percentage of the profits of the banking institution, it is about 65% of the total profit they have made.
65% of the profit?
65 as a percentage of the net profits.
My goodness.
Because these financial services you pay on the gross income. VAT on financial services at, say, earlier it was at 16%, but now it is at 8%. That is on the gross interest income earned by these people.
And Dr. Wijewardena, because of this tax, what impact will it have on the rating agencies' outlook on Sri Lanka, and especially on these two sectors specifically?
Well, financial sector would be downgraded by rating agencies because if the now we'll have to keep in our mind that because of this COVID-19 pandemic, already there had been a fair amount of non-performing loans in the banking sector, which would have already eaten up the quality of their assets. So on top of that, if you impose this surcharge also, what happens is it will have a very negative impact on the capital of the banks. And as a result, the rating agencies would surely take that factor into account when they give the new ratings on the banking sector of Sri Lanka.
And then what effect will this have on the availability of funds in the microfinance sector?
Microfinance sector will not be affected very badly for us. One reason is that the microfinance institutions are not subject to this surcharge because they don't make this huge profit of 2 billion rupees per annum. In the case of the formal financial institutions like banks and finance companies, their exposure to microfinance sector is very limited.
All right.
There is no any immediate impact on the microfinance sector as a result of this.
Okay, then what about the international relationship between the local banks and their foreign counterparties?
That will be affected very badly. Already, because of the shortage of foreign exchange in Sri Lanka for us, whenever a local bank opens an LC with the foreign bank, the foreign bank insists that that particular LC should be guaranteed by a third party. And we had a similar situation during 1970 to 77 when Mrs. Bandaranaike was in power. That is because the foreign bank does not recognize the local bank as a bank which would be able to honor its foreign exchange obligations. Now, this has already happened. So when the capital structure of the banks are in fact reduced as a result of the surcharge that they have to pay, the foreign banks would take that factor also into account when they decide on the lending limits to a Sri Lankan bank.
So then what would the dollar borrowings of the local banks then? Will it be likely to be higher, the rates?
No, for us, even today, the local banks cannot make dollar borrowing because already most of the foreign banks have cut the limits that they have fixed for the Sri Lankan bank. Right. So as a result, we are unable to make these dollar borrowings already. So therefore, this doesn't
arise.
Yeah.
All right. Well, the major shareholding in banks is set at a limit of 15%. So the balance are in effect retail investors. So few investors, basically around 50%, are retail investors. So this act or this proposed bill, if it becomes an act, will consider these retail investors also to be rich. So won't their returns also be impacted?
Well, I think there's a misconception about categorizing a particular company as a rich profit maker.
Yeah.
Main reason for us is that all those so-called rich companies are employing ordinary people of the country, and also they are buying inputs for production also from the ordinary people of this country. So as a result, if these rich people go bankrupt, those employees also will go bankrupt, and the people who provide inputs to those companies will also go bankrupt.
So Dr. Wijewardena, Dr. Wijewardena, the banks are supposedly making good money. So what would their return on the net asset value be?
Well, even if you consider it in absolute terms, their profits are very high. They have been subject to criticism by many people that they are making big profit.
Yeah.
But those profits are made by using a huge amount of assets. If you take the net profits as a percentage of the total assets they have used for that purpose, it's about only 1% of the total assets. So as a result, they are not making big money compared to the total assets they have employed for us.
Will interest rates go upwards because of the allocation of funds to pay the surcharge tax?
In my view, what would happen is banks are already in Sri Lankan banking sector has already a rupee shortage problem now, because if you look at the daily figures released by the central bank, the total liquidity shortage of Sri Lanka's banking sector is in the region of about 600 billion rupees per day.
Right.
A huge amount. And how has this shortage been met is that central bank at the end of the business day lends these banks out of its own money lending window about 600 billion rupees. So what would happen is, if they are to pay this money before the end of, say, March 31st, the first installment, and the second installment before the end of June 2022, they will have to make further borrowings from the central bank by pledging the treasury bills and treasury bonds that they are having in their portfolio. So which would mean that the country's total lending by the central bank, which people loosely call money printing, will go up. So when it goes up, naturally there will be inflationary pressures, and the central bank will have to increase interest rates to mitigate those inflationary pressures. So as a result, one can expect the interest rate structure to go up because they have to pay this tax to the government.
The foreign banks to Sri Lanka will also, obviously, as you just discussed, will be impacted. So how will they reflect these local taxes in terms of their reporting to their overseas-based head offices? So will the parent companies in these overseas territories, will they also have to change their method of accounting? Because I'm talking about the aggregated losses here.
No, for us, what would happen is that, these foreign banks have come to Sri Lanka on the understanding that there is a consistent tax regime in this country.
Yeah.
But when we disturb that particular consistent tax regime by imposing these surcharges, what would happen is those people will make a negative opinion about the Sri Lankan banking sector. As a result, the foreign banks might even relocate themselves from Sri Lanka to some other location in the region. So this is what we have to expect, because all the foreign banks operating in Sri Lanka, except the small Indian bank, they are making profits more than 2 billion rupees per annum, and as a result, they are subject to this surcharge.
Let's go for a quick break and take a peek at this evening's headline news from that young and vibrant News First primetime news team. We'll see you on the other side of the break with Dr. W.A.Wijewardena, the former Senior Deputy Governor at the Central Bank of Sri Lanka.
News First Newsline with Faraz Shaukat Ali.
And welcome back to Newsline Zoom. I'm in conversation with the former retired Senior Deputy Governor of the Central Bank of Sri Lanka, Dr. W.A.Wijewardena. Now then, Dr. Wijewardena, thank you for this analysis as we go along. For the macroeconomy, the raising of 100 billion rupees from the surcharge tax on companies, 300 billion investment will need to be withdrawn from future investment plans. Is that about right?
Well, what would happen is that in the budget for us, the amount of this 100 billion targeted by this taxation had been an underestimate. The main reason is that if you take the companies that have been listed with the Colombo Stock Exchange, based on the profits they had made during 2021, I have found they are subject to this surcharge of about say 65 billion Sri Lanka rupees. So they will be 65 billion. On top of that, Employees Provident Fund was supposed to pay another 40 billion. And all other funds like say the ETF and all other provident funds. So therefore the government had underestimated the total amount that they would have raised out of this. Most probably the government would have ended up with a super collection of tax revenue because of the surcharge, amounted about say 250 billion Sri Lanka rupees. So which is again, as you say, the companies which are subject to this particular payment will have to either sell their assets or keep those assets as collateral for raising money from a bank, or as you say, simply withdraw the capital that they have employed. So that is why I say, if when you implement this kind of a tax on past profits, it's a very bad tax regime that we have implemented.
So banks will have issues then raising future capital, particularly from their foreign shareholders. After all, these banks, they still criticize the super gain tax, at least at one-to-one discussions, if not openly with the media and with me, for example.
Well, yes, I mean, of course, we'll have to keep in our mind for us, whenever you impose this kind of a tax, the taxpayers actually get a shock. So as a result, you cannot expect a very friendly response from the taxpayers. So they are shocked because they don't have money with them to pay this tax. And also this tax is a very high tax. What the government would have done is, if they wanted to raise this money for us, they would have simply imposed on the current revenue a surcharge of about, say, 10% surcharge. That is, they are already paying 24%. You raise it to 34% across the board. So all the taxpayers will pay additional 10%. And as a result, everyone will feel that they had made a contribution to rescue the country from the current economic ailments. Now, this is
the plea, of course, to the government is not to use such ad hoc taxes with a retrospective element to it, which appears to violate all fundamental rights, and which is why probably people are getting ready to go to the Supreme Court once this order is placed on the order books in Parliament. But if this government were to ignore that plea of not using ad hoc taxes, then why wouldn't the government make it absolutely clear that these kind of taxes are going to be the norm, and they will be doing it with regularity, so that foreign companies can plan to unwind and pull out from Sri Lanka? And of course, in such a scenario, there will be no foreign investor willing to come into Sri Lanka.
For us, whenever you introduce this kind of taxes, I don't think it would be helpful to the economy. That is because you are collecting this money not out of the current revenue of these companies, but of the revenue that they had earned in the past. So as a result, there is a negative impact on investment sentiments, and most probably this would be taken into account by the foreign companies that would be planning to come to Sri Lanka. Even the local companies will relocate themselves from Sri Lanka to some other destinations. So these are the likely consequences that could happen, which could have been avoided by the government had it restored the tax regime which had prevailed prior to year 2019, because they could have earned an additional 500 billion rather than this 100 billion.
And you know, high taxes on the banking sector, surely will it not hinder these banks' plans, if any, to expand regionally?
Certainly, because as I said, Sri Lanka's banking sector is currently taxed at the rate of about, say, 65% of the net profits, which is a very high amount. And when you add another surcharge of 25%, this is totally unaffordable by this bank. At a time when the non-performing loan portfolio is increasing in this bank, their capital is being depleted, reduced. So the banking sector would be the most adversely affected by this particular tax.
And of course, on another point, these high taxes and these special one-offs, I call them regular taxes, because the last government said it's a one-off, and this government says it's a one-off. But you know, it's happening with alarming regularity. So, what about the effect this has? You know, because obviously this will impact on the remuneration packages of employees. So retention of key personnel will become a problem, and the brain drain issue, which is now being faced in Sri Lanka, will take on an even greater importance, and there'll be even more people, qualified people, leaving our country.
This is an impact not only in the banks, far as this is an impact that might have on all the companies that are subject to this surcharge. Because as I told you, all these companies will have to either sell their assets or borrow money from a banking institution in order to meet this requirement. So in my view, the employers will be affected as a result of that, and there will be other adverse consequences arising out of that.
Thanks to various people who've sent me questions previously, and I'm taking one from before. It says here, most private banks' loan portfolios did not increase during 2020-2021. As a result, excess funds have been invested in government bills and bonds, which are risk-weighted at 0%. Now then, when the private sector credit demand returns, banks will divert money, which is all now invested in treasury bonds and bills and so on. They will divert it back to loans. This, according to one of my listeners, says that this will have a massive impact on the capital adequacy ratios. This will limit private banks' lending ability in the near future.
Yeah, you are correct, Faraz. I mean, as I mentioned earlier, the banking sector is already affected by a rupee liquidity shortage, amounting to about 600 billion Sri Lanka rupees on a daily basis. On top of that, if there is another payment which they have to make or to government, this particular rupee liquidity shortage will increase further. So what it means is that the banks will have to make a very critical decision on expanding their loan portfolio, and even the government might be one of the affected parties, because they may not be able to reinvest the money that they will collect out of the maturing treasury bills and treasury bonds. So that means that when you try to get this money out of the companies which had made profits in the past, in the current period, it always affects adversely the operations of the economy for us.
And almost finally, Dr. Wijewardena, can you tell me, at what stage is this proposed surcharge tax? Is it actually at a bill stage, or has it, because it's been included in the budget proposal and the budget's been passed, is it now law, or what stage are we in? Because we have politicians saying all sorts of jolly things. I thought I'll ask the expert, which is you.
Yeah, it is at the bill stage for us, and the bill has to be taken up in Parliament. And what the most senior ministers had disclosed to press is that any amendment needed would be done at the committee stage when the bill is discussed in Parliament. It is at the bill stage now.
So in terms of anyone in Sri Lanka wishing to go for a special determination from the Supreme Court on this matter, in case they feel that it is impacting on their fundamental rights, when this bill is tested against the Constitution of Sri Lanka, that option is still available because this bill hasn't been placed on the order books just yet.
Yes, it has been gazetted now.
So the next process is to put it on the order paper, and then if anyone wants to go to the Supreme Court, they've got 7 days in which to seek a special determination in terms of Article 121 of our Constitution. Is that about right?
Yes, that's right.
Well, you know, Dr. Wijewardena, it's always marvelous to speak to you. And you're, of course, an expert now on Zoom sort of technology. But we look forward to welcoming you to our studios just as soon as this blessed COVID-19 decides to go back for wherever it came from. Do you agree?
Yes, I agree.
Thank you very much. That's wonderful talking to you. And that is the way it was, ladies and gentlemen, on Newsline Zoom this evening. It is now, of course, time for that absolutely super-duper program, which is also known better as the primetime news from News First. Take care, God bless you, and good night.
Newsfirst Newsline with Faraz Shaukat Ali.